Good evening, sir.
Yeah, good evening, madam.
Sir, ମୁଁ ଆପଣଙ୍କୁ host କରିଦଉଛି
ଆଜ୍ଞା
so that
ଆଜ୍ଞା
you can share and all.
ଆଜ୍ଞା ଠିକ ଅଛି।
ଆଜ୍ଞା, sir.
Is it visible to all of you?
Yes, sir. Good evening, sir.
Good
Yes, sir.
evening. Good evening. Very good evening. So, can we start or will wait for 1-2 minutes? As you wish.
We should start.
We should start. So, thank you very much. So, in continuation to our last class discussion, we started with the fundamental concepts so far as the international business is concerned. And so these are the certain things which you have already discussed. I will not repeat again. I will straightway take you to any queries on our last class discussion. I'm sorry I took few more times, around 20 minutes extra. The chapter itself speaks about demanding and challenging, so that we are supposed to discuss more. Okay, we also discussed the tariff and trade. I would like to come to the slide where I left it. Yeah, this is what okay. So this is what we are discussing about the impact, and I was talking to you that this in the current month, of course, in the November 2025, there is a great impact of this Indian stock market influenced by the US tariff. So this is what we have already discussed, and okay. So the Sensex and Nifty has corrected around 2.8% on MOM basis due to the FII outflows and the rupee weakens. And the current the dollar price, it is record 88.78, and today at least slightly corrected. Now today is 88.59. No issue. So that's because of the inflation and the purchasing power of the money, the GDP and other sectors. Despite of this, the external challenges and hindrance, we see that good number of IPOs are coming now. I hope you must have gone through this. Lenskart and other Lenskart has come up with the biggest IPO, and recently it is opened, and many more IPOs has come up. if you wanted to go to the details to know who are the IPOs they're coming, there is a website called chittargarh.com. That's a good one. There are many websites that are grow and all, but I found chittargarh.com is a good one where you get all the IPO information. Right? If you have any interest, you can go. Anyway, so this is what the Indian companies, this challenges it has come up so far as the stock exchange listed on US stock exchange, right? You can see a good number of companies, Indian companies listed on US stock exchanges, and HDFC Bank, you can see the market capitalization is around $170.85 billion. Friends, I hope you must be knowing about what is market capitalization. If anybody can tell what is market capitalization, I'll be very happy. What is market capitalization?
The share price into number of outstanding shares gives the
Wonderful,
market
sir.
capitalization.
Very nice, sir. So from this, we used to study that what is the credential and credibility of the particular company. Because the price and volumes, it's a matter of concern. And when we do technical analysis, we used to interpret analysis to the charts, how it has been prepared. Next to HDFC is ICICI, Infosys, Wipro, Dr. Reddy's, McMatrix, and a good number of companies also listed in the US stock market. Like in India, we are having this NSE and BSE. In US, they have got New York Stock Exchange and one more is the NASDAQ. Okay. So this is what I wanted to show you with an objective that yes, we are not far away from any of the countries, and we also transact listed in the New York Stock Exchange as well as NASDAQ. I hope you know NASDAQ is the it is the second largest stock exchange in the United States after the NYSE, and that's what the trading and volumes they used to have. This is what one statistic. Okay. Now let's discuss. This is what it was left out in our previous class session. Now I'd like to discuss the regional blocks as well as the WTO. Friends, these regional blocks are the group of countries that form agreements to reduce the trade barriers among themselves. We have a good number of countries we used to transact so that not face any sort of regional barriers, and we have tried to transact through the rupee value also, like Bangladesh, as well as Singapore, Nepal, Bhutan, Indonesia, UAE. So they also accept our rupee to transact. So this trade blocks, it helps countries to transact themselves without any trade barriers. This is one. Two, the World Trade Organization, WTO, is the global body. It oversees international trade and forms rules, regulations, and resolve disputes among the nations. It's supposed to, for any sort of challenges it comes, they used to resolve it. So this regional trade bloc is a group of countries within a specific geographic region that they all agree to reduce or eliminate any trade dispute or trade barriers. Sorry, related to tariffs or any code to promote economic integration. The purpose of this is to facilitate trade among member nations, strengthen the regional cooperation among themselves, and exchange bargaining power in global. Right, friends? This is a concept in relation to the international business. We talk about regional blocks and world trade organization. So, if you see the graphs, these are the countries belong to the blocks. If you see the now India is moving more towards the European Unions, and there are around 27 member countries, and the purpose is the deep economic and political integrations through the transaction, the currency of euro. So this is what the statistics which speaks about how these blocks helps, and we gather information and trade with the member countries. So European Union's one is the around 27 European countries. United States, Mexico, and Canada agreement. We have the tie-up with North America liberalization order. What the data I just shown to you, I thought to have a little bit analysis. Not that important for us. Okay. Now let's go to the World Trade Organization and the Global Trade Organization. It was established in 1995 and succeeding the General Agreement on Tariffs and Trade, we got that. Headquarters is Switzerland, Geneva. There are around 166 countries as a member as of 2025. And the basic objective, the core functioning of this organization is to facilitate trade negotiations among the member countries. It provides a platform opportunity to transact for a better understanding between the countries as well as their product. One, to resolve the disputes, they form legal guidelines and regulations for settlement of any sort of conflicts arises. Monitors their trade policies as well as supports developing countries. There is a good analysis. It is available. If you wanted to go for deeper things, you get the information from rbi.org.in. It's an RBI website, and you all get all the statistics so far as the WTO and other information. The principle is non-discrimination, and this is most favor and the national treatment. There should be a free trade and predictability. The commitment and transparency they used to maintain with a fair competitions and to avoid unfairness practices among the members. There are certain challenges like the rising protectionism and trade wars, conflict at the regional blocks, slower decision making due to a conscious based structure. The role basically, WTO doesn't provide direct finance aid to any country. Like World Bank and IMF, they support financial support, they provide financial support directly. WTO only provide facilities or the role like it facilitating trade-related developments, one, two, supporting infrastructure and policy alignments, enabling participation in global trade business. This is what it was left out in our last classes of the Unit 1. Friends, we have only 8 classes and there are 5 modules. So we have to be a little bit faster on this. And now we'll go to the Unit 2. It speaks about the foreign exchange market. This is what I am showing the syllabus. It's a very vast course, but we'll be limiting to this. What we would like to discuss the concept of foreign exchange market, determinants of the foreign exchange rate, fixed and flexible, and certain theories and who are the participants in the foreign exchange market. Okay, let's go to the foreign exchange market. In short, we call Forex or FX. It is the world's largest and most liquidated financial market where currencies are traded 27 24/7 across global financial centers and through a concept we called OTC, over the counter exchange. I'll tell you what is this OTC market. It is a kind of decentralized marketplace where the financial instrument like stocks, bonds, currencies, also derivatives, also traded directly between parties without a centralized exchange. I was working with this concept, India concept idea, and Dr. Manmohan Singh brought a concept from US NASDAQ. It was 92, 91, 92. I was working in Bombay. And the name of the company, it was OTCEI. It was just like a national stock exchange. Before the formation of NSE, OTCEI it was formed. It was over-the-counter exchange of India, and the objective was scriptless, no share certificate, ringless, no trading hall, scriptless, ringless online stock exchange. Okay, so the concept it was brought from the US NASDAQ with an expectation that this that time there was a lot of on-performance practices which was identified after the Meta issue, Ketan Parikh issue, and a lot. And government wanted to intervene. SEBI wanted to see how transparency can be done in the market, stock market transactions. So this is what I want, just additional information that I wanted to give you. So the Forex is the world's largest and most liquidated financial market where currencies are traded 24/7 across global financial centers. Friends, I hope you know OTCI. Anybody who knows the OTCI, please. Am I audible to all of
you? Yes, sir.
You know, sir, this concept of OTCI because it lost the existence now. No more OTCI. Anyway, so it lost because it was made for small and medium scale companies, those who have been paid up capital 30 lakhs to 25 crores. And because of that, it failed because a lot of challenges it has come. Anyway, so this foreign exchange is a market, is a financially liquid market, transacted 5 days in a week, post Saturday and Sunday is holiday, and it's globally traded. It determines the exchange rates and facilitates the international trade and investment. Let's look at what is this foreign exchange market stands for. It is a decentralized, I was just talking to you, it is a decentralized over-the-counter marketplace. Over-the-counter marketplace where the financial instruments are traded directly between the parties without a recognized centralized stock exchange. That's not required of the exchange. So it is a decentralized over-the-counter marketplace where parties buy, sell, and exchange currencies. Okay, here it is dealing exclusively with the currencies, and it operates continuously from Monday to Friday, spanning major financial hubs like London, New York, Tokyo, and Sydney. So this is what we call foreign exchange market. It is a place, it is just like, for those who don't have any exposure in the stock market, I can tell you, it is just simple like a market, like our any vegetable market. It is also a market where this currency transactions are made. Currency transactions like buying, selling of currencies and exchange of currencies are being done here in the foreign exchange market. Like in BSE, we transact stocks, bonds, equities, etc. Like that also we used to transact here Monday to Friday. Okay. So let's look at the key features of this foreign exchange market. It is globally rich trades occurs across borders, enabling international commerce. Over $7.5 trillion traded daily. You can see the liquidation part, it is highly liquidated, making it the most liquid market. $7.5 trillion transacted on a daily basis. No central exchange that speaks about decentralized structure, and transactions happens electronically between party participants. Okay, so there are terminals. We used to use those terminals. It is linked with the main the centralized terminals, and parties used to offer buying price and selling price, and this is being done through the online or electronically with instruments. It's 5 days a week, Monday to Friday. That is covering all time zone. That because internationally used to transact the foreign exchange, so we call 24 hours operations. These are the key features: global reach, high liquidity, decentralized structure, and 24/7 operating system. Let's look at different types of forex market. One is the spot market, which is transact immediately, immediate currency exchange at the current price. Second is the forward market. Buying and selling set the price currency exchange at a future date or at a fixed date. Right? So contracts to exchange currency at a future date and fixed date. Future date and fixed date. Future market, this is what you will going to discuss in finance specialized subject called derivative, where you will discuss forward, future, spot, option, swap, and all details you cover. So this future market, it is a standardized contract traded on the exchange. Forward is not traded in the exchange. Future market is routed through the exchange, stock exchange. Option markets, there is a right because there is no obligations to exchange currency at a set rate. These are all different types of forex market. So these transactions are being done with these four categories, types of foreign exchange markets. These are the when we transact the foreign exchange market, we always consider the pair. It's not single, neither USD or Euro or Japanese yen or what. It is always done with a pair, because we used to compare the price. Suppose if I take the example of a burger or a coffee in India, the price in US maybe it's $1. In India, it would be something different. So that comparison we used to find out, and that analysis we used to do, understanding that how it is being done on a pair basis. So Euro to USD, USD to Japanese yen, British pound to US dollar to Indian rupee. Like this, their pair transactions are commonly traded with currency, all the currencies. Is it okay to all of you? Is it clear to all of you?
Yes, sir.
Yes, sir.
Yeah. So this is lot of calculations are there. So I'm not going to cover that. I'll go into details, of course, as per the syllabus requirement. So all being done with the pair, then only we can see what is the current analysis we used to follow. The pair, suppose the concept of pair, suppose if I say there is a concept we call PPP, purchasing power. So if a burger cost is 150 rupees in India, and say if it is $5 in US, then the PPP exchange rate it would be around 30 rupees per one burger. 30 rupees for one burger. How it is calculated? I'll go through the calculation when we'll discuss the PPP. So friends, this is what the process of commonly traded currency on the basis of pair, not single, but on the basis of pair. Pair means two, with the two currencies or two currencies of two different countries. Now let's discuss how to what is determining the exchange rates. Exchange rates are primarily determined by the on the basis of the demand and supply in the foreign exchange. Demand and supply of the foreign exchange market, which is influenced by factors like interest rate, inflation, political stability, and central bank policies. When we discuss, there are two more concepts we always discuss. The risk can be categorized with two factors. One is the systematic risk, another is the unsystematic risk. Systematic risk are the risks which we cannot avoid. It is unavoidable, like your interest rate, your inflation, your GDP. All these things we cannot avoid immediately. If I say this, the other side, that is unsystematic risk, that we consider it is business risk or financial risk. Suppose there is a strike, right, or there is a sudden shutdown of the factory production because of the strike or lockout or drought. This can be classified. This can be solved. It may be a short term. Suppose there is a debt issue. You are not able to get the working capital fund immediately. So that can be overcome. So those things we consider as the unsystematic risk. So these are the factors like the inflation, GDP, interest rate, purchasing powers. These are the factors which influence the demand and supply, in the foreign exchange market. So friends, as you know, the value of rupee is determined by the market. That is the demand and supply. Value of rupee is determined, or the value of the currency is determined by the market. That speaks about the demand and supply of the currency, which is based on the factors. These are the factors: interest rates, inflation, right, political stability, and central bank policies. Let's discuss different types of exchange rate system. There are three types of exchange rate system. Let's discuss one, the floating exchange rate, that determined by the market force. Just I said, on the basis of supply and demand for the currency. And the most major currencies like the US dollar, euro, and the Japanese yen follow this system to understand the supply and demand. Central banks may intervene occasionally to stabilize the extreme volatility in different foreign exchange currencies. So this is what on the basis of floating exchange rate. Another is the we call fixed, or this is also we call pegged exchange rate. Fixed exchange rate. A country pegs its currency to another, for example, US dollar or a basket of currencies. So that is fixed. And the central bank maintains the rate by buying and selling its own currencies. For example, the Saudi riyal is pegged to the US dollar. The central, the bankers' bank or the central bank or the apex body, they used to take decision how to understand this policy. Another is float or dirty float, we call, or managed float. It is a hybrid system where the currency is generally floats, but the central bank intervenes to stabilize it. In India, we follow a managed float system. In India, we follow the RBI or the central bank. They follow a managed float system. These are the key factors which influence the foreign exchange. The factors just we discussed, that is what the interest rate, higher rates attracts a foreign capital, increasing demand for the currency. I was going through one article that China has purchased a substantially good amount of bonds from the US market. So if anytime he is going to redeem it, it will be a big challenge for the US uh, to, um, to support the redemption prices. As you know, interest rate and principal both it has to be paid at the time of redemption. Another factor is the inflation. Okay. So the lower inflation it boosts currency value and purchasing power remaining very strong. I hope you must be knowing that the repo rate, Reserve Bank of India, they used to monitor repo, reverse repo, CRR, SLR, cash reserve ratio, statutory liquidity ratios. These are they used to maintain. Sometimes you must have seen that the governor of RBI has reduced the repo rate. The objective is that the money should float in the market, right? So in the process, the banks also have to place a deposit with the RBI, and they would like to increase the lending. Reduce the housing loan or lending rate, so that people would like to come and avail more more amount of loan if the interest rate has gone down. In the process, suppose if the interest rate of a housing loan, suppose for example 10% interest rate, so I will be reluctant to go because I have to pay the higher interest rate. If it comes down to 6.57%, so definitely what happens, people love to go for this. If I wanted to construct a building, then it will be easy access to take the loan and go for the constructor of a building. In the process, what we found, it affects the cement market, it affects the electrical paints, so multi. So in the process, what we found, the money floats in the market, and inflation will be in a controlling measure, and the consumer would get the measure satisfaction of that. So that is the reason why the Reserve Bank intervene, central bank intervene to monitor this, repo, reverse repo, CRR, and SLR empirically to overcome the inflation rate problems. A surplus increases demand for a country's currency. A deficit can weaken it. Okay. So, as you will know, the surplus price. Okay. So in balance sheet also we see that the surplus price increases demand for a currency. We see the reserve and surplus, right? If it increases, it really boosts the country for a positive trend for its development. Deficit definitely will be there. Okay. Then there is a political stability. Stability government attracts investment. It strengthens the currency. Okay. So the FIs and FDIs would love to invest. Look at the policies. If it continues, there is a stable government. As we have seen during the time of Mr. Bajpayee, there was a crisis moment for India, a panic situation for that. Subsequent stages, we see that there is a stable government and people love to invest in the stable government. So it will strengthen the currency also. It will have a direct impact on the currency. High debt may deteriorate deter investors, leading to depreciation. So public debt speaks about that. Speculation, traders' expectation can drive short-term currency. These are the few key factors which influencing the exchange rate determination. Let's look at the one example. I thought to go for USD and INR. If demand for Indian rupee, Indian export rises, if demand for Indian export rises, the foreign buyers need more INR. If the demand for Indian export rises, foreign buyers need more INR, increasing its value related to the US dollar. Conversely, if inflation rises in India or political uncertainty or instability grows, the INR may also weaken. There is a concept we call a fixed exchange rate system, which we have already discussed. So we follow the hybrid model. There are certain key features of this fixed exchange rate system, I thought we will discuss this, is government intervention, stability, and there is a limited flexibility in the fixed exchange system. The advantage is promotes economic stability and low inflation. It also encourages foreign investment due to predictable exchange rate. In disadvantage, it requires large foreign exchange reserves to maintain the peg. Okay, the fixed exchange rate, which is also be called peg rates. It limits the central bank's ability to respond to domestic and economic issues. Like that, the flexible exchange rate or the floating, this determines the market force that based on the supply and demand, which we have already discussed. Now let's look at the exchange rate theory. Okay, first theory speaks about purchasing power parity, or we call PPP theory. Just I said PPP concept. It is like there is a small calculations of the PPP. Please note down that PPP exchange rate is equal to cost of basket in country A divided by cost of basket in country B. Am I audible to all of you?
Yes, sir.
So PPP exchange rate is equal to cost of basket in country A divided by cost of basket in country B. Okay, I just give the example about the burger example, that the cost of a burger, say rupees 150 in India and $5 in US, then PPP exchange rate would be rupees 30 for $1. Rupees 30 for $1. It suggests that exchange rates adjust or equalize the price of identical goods in different countries. This is what we use to identify the goods and transact on the basis of the PPP exchange rate. If a basket of goods cost 1,000 rupees in India and 10 in US, or 10 in US dollar, it's a dollar, the exchange rate should be 100 by 10 in the US, and the exchange rate or the PPP exchange rate would be should be 100 rupees. That is what we used to analyze. Assume that there is a free trade and no transportation cost. This is used for long-term exchange rate prediction. This is what highly used insofar as the exchange rate is concerned. Second is IRP, or we call interest rate parity theory. This theory states that differences in interest rates between the countries affect exchange rate. Investor will move capital to countries with higher returns, influencing the current demands. Investor will move capital to countries with higher returns. As we know, the FIs invest in India with an expectation to get a better return, and they always try to analyze the intrinsic value to understand the the concept how they will sustain the market, which influence the currency demand. The IRP theory helps explain forward exchange rate and arbitrage opportunity. As I said, forward exchange rate, it is a unregulated and no need of any of the exchange. Parties, they can directly transact and operate through the arbitrage pricing process. There is another concept we called theory of the exchange rate, we called BOP, balance of payment. Balance of payment. This is what the same accounting debit and credit principle we followed to maintain the BOP. So if the supplies is more and the price falls, supply is more, generally the price falls. And payment made in foreign exchange, we transact that it is a debit transaction. If payment received, when we say payment made in foreign exchange, it is a debit transaction. Payment received in sorry, sir, anybody is saying to me something? Hello? Am I
No,
audible?
sir. Yes, sir, you are audible, though they are talking among themselves.
Okay, no issue. So sometimes it happens. Okay, no issue. So what I'm trying to tell you, if the payment made in foreign exchange, payment made, we put it in the debit transactions. As you know, accounting, you must have studied accountancy, debit and credit. And payment received in foreign exchange, we put it in the credit transactions. And we used to follow the foreign exchange inflow and outflow. If inflows are more than the outflows, we consider it is a surplus. Otherwise, in reverse, we call it as a deficit. Okay. So the balance of payment has to be maintained. The balance of so exchange rates are determined by a country's trade and capital flows. Capital flows. As we know, foreign exchange inflow. If the inflows are more than the outflows, then we would like to book a surplus fund. A surplus, more export than the imports. This really strengthens the country and the deficit we can see. I was showing in the last class that how India is doing export to US, and now the real challenges will come. And this balance of payment theory, this focuses on real economic transactions we follow. Okay. The next theory is the monetary approach theory. It links exchange rate to a country's money supply as well as the inflation. More money supply, higher inflation, which weakens the weaker the currency. More money supply, higher will be the inflation, and this weakens the currency. So it emphasizes the macroeconomic fundamentals. Next, here's the portfolio balance approach. It considers investor performance for domestic versus foreign assets, and the exchange rate adjusts based on risk, return, and diversifications. Okay, diversifications has to be that speaks about the portfolio analysis. Risk, the return, I don't know whether you have studied the portfolio management or not. We go in details in the diversifications, that is your unsystematic risk can be diversified. Systematic risk is fixed. Your interest rate, purchasing power, inflation, GDP, this is fixed. We cannot do anything on that. Diversification can be done from the financial risk, business risk. Okay, this can be taken into consideration and can be reduced. So these exchange rates are also adjusted on the basis of risk return and the diversification. This is useful for understanding the short-term fluctuations. There is another we call asset market model. It views currencies as assets traded in financial markets. Okay, exchange rates reflect expectations about future economic conditions and highly return in modern globalized financial markets. Let's look at who are the parties of the foreign market. One, the central government or the Reserve Bank of India we consider, or every country they have their own central bank. Federal Reserve is the US RBI. So the role of the central bank or the government is to regulate the currency supply, stabilize the exchange rate, and implement the monetary policies. Okay? For example, the Reserve Bank of India, US Fed Reserve, and the European Central Bank, they monitor the monetary policies, regulate the currency supply, and stabilize the exchange rate. They intervene in foreign market to control inflation, manage reserves, or support economic goals so far as their activities are concerned. The first party is the central government. Second is the commercial banks. Facilitate currency exchange for clients and engage in priority trading. Okay. So, for example, JP Morgan Chase, HSBC Bank, CT Bank, even State Bank of India also they facilitate the currency exchange. There are certain branches they deal directly exclusively with the currency transactions. They handle large volume of foreign transactions daily, often acting as a market maker. Another, this is multinational corporations. They conduct cross-border trades and investment, like Infosys, Toyota, Apple. They use foreign exchange market to hedge against currency risk from import, export, or overseas separations. So this hedging is a private investment fund that pulls money from accredited investors and used advanced study on this basis. Okay. Next is the investment firms and hedge funds. Okay, this is speculate on currency movement to earn profits, like your BlackRock, these workers, associates, etc. Their activities are used complex strategic and large capital to influence short-term market. The retail traders, like individual investors, also trading through online platforms. Meta traders, foreign exchange brokers are there. They transact through online platforms. Speculate on currencies pair using leverage, often with a smaller capital. Brokers and dealers, the role is intermediaries between the buyers and sellers, and they provide a trading platform, execute order, and offer liquidity. Sovereign wealth funds, like government's own investment funds. For example, the internationally, there's Norway's government pension fund, Abu Dhabi Investment Authorities, they follow the sovereign wealth fund. Reserve Bank of India is also having a sovereign fund. They invest in foreign assets, influencing the currency. So this is all about the second model. Anything you would like to discuss? This is not that simple to cover within an hour. It takes time. Honestly speaking, each word is a very powerful word. It's a lot of analysis and interpretation. I tried my level best to complete within 1 hour. Anything you'd like to discuss also, you are most welcome. Anybody is from banking sector working? This is you all are working executives now, I believe.
Yes, sir. We all are. All, not all, most of them.
You are working, sir, somewhere?
Yes, sir. I am working, but most of us working.
Okay. This is for a working executive. Okay.
Hello, sir. I am an ex-banker, but currently I'm not working in bank.
Ex-banker. Which bank, ma'am?
Axis Bank.
Axis Bank. Okay. Okay. So, do you deal with any foreign exchange transactions?
No, it was another department at the same branch, but I was working for the customer service.
Okay.
Main
Axis Bank, you must be your regional
foreign exchange.
Regional office or somewhere in the head office. They must be transacting with this foreign exchange.
Yes, it was there in my
Yeah,
branch.
it is there because I used to take bankers classes. You have got JIB and CIB course. JIB and CIB banking employees, they complete, they get promotion and increment also. So they have to qualify that examination. So I used to interact with them. And anybody is from banking or stock market experience. This needs a lot of discussion actually. Sir, somebody is very actively participating. Would you please tell me where you are working? Anyway, so any queries, anything you'd like to ask me? You have to go to the details of the theories and analyze it, interpret it using the current what is going on. All the transactions are being there with in the Reserve Bank website also you'll get it. IMF website, World Bank website. They follow details of the foreign exchange transactions. These are what we discuss about the conceptual and fundamental. The real transactions are occurred when we do the buying and selling of the foreign currencies through a dealer. That's really understanding at what time I am going to buy, what should be the dollar price, what commodity I would like to invest, and on that basis you need to decide.
So some days ago, there was a news.
Sorry, sir. Not,
Sir, few days ago, there was a news. Some India is trading by its own currency, rupees, with other countries.
yes.
Can you say a little bit about this?
Yes. I just told with my discussion that Nepal, Bhutan, Sri Lanka, Singapore, and Indonesia, and UAE. So India wanted to transact through the rupee values. It will be easier for our transactions. They agreed. These countries, they agreed. They also doing transaction with the rupee. But the major challenge is US. The major challenge is US because they are not allowing. They don't want to see that rupee should come up. They don't want to see the rupee values should come up. That is always we see the weaker in the rupee value. Now we reached at 88, sir. $1 it cost to us.
So why we are always comparing with USD?
My slides you must have seen the major export items around $79 billion. $79 billion we used to transact with US. It's not a joke. So even though we are the third largest economy in the world, but we are dependent on them because they are the number one, the largest economy in this world next to China. China is the second place. So honestly speaking, they have the money. That's what we see. And buyers are ready. We need to develop this demand and supply. That is what we always depend on the market. And they wanted to restrict us. Why this conflict? Because we always maintain a good relationship with Russia. And the crude oil we used to buy from Russia. And from government, they want, no, you should transact because they are also rich with us. Crude oil, they say that you need to transact. And slowly what happens, we also started buying from them also. Pharmaceutical sectors, if you see textile sector, if you see the gems, jewelries, all items. So they have purchasing power. They have the purchasing power. They understand the value. And that is the reason why we even slightly now we are also diverting towards this European countries. I have just shown in my slide, you must have seen the data, the statistics, that we also tries to look after the other countries, how we can do the transaction. Mostly the Canada we have seen, the other countries also, European countries mostly. We wanted to transact with them to surpass the deficit what it will come up in the US transaction. Last September, it was the last shipment of the old tariff rate. Last September. After that, when now the second next shipment will go, it will be the bigger tariff rate. let's see, let's hope for the best. At least we should have maintained a good relationship. Mr. Jaisankar is into this work. They're trying level. This is international, the geopolitical analysis. When we do the fundamental analysis in the stock, even though we talk about EIC analysis, economic, industry, and company analysis, now we add P, because P is the very important now. In the classes now we are teaching, no, only EIC is not enough. PEIC is now, P is more priority. If P is okay, political stability, geopolitical economic system can be established. If it is there, your industry will go. Your companies also would like to grow. So you see the service sector now. We are now going to face big challenge for the service sector, especially IT service sectors. What the TCS, Capgemini, Deloitte, Infosys, Accenture, mostly they are into the service sectors. If they are not going to use our manpower, that's the reason they increase the prices, right, sir? So companies are not $1 lakh. So companies have to pay around 86 lakhs to retain their employees in US. They have to pay for that. H1 visa, that they have to pay for that. This is one the mix only. So there's things are going on. If in India we are, one good thing is that it's a highly populated country, 125 crore, and talents are very, our domestic DII investment. If you look at those DII investment, domestic institutional investment, if you look at the mutual fund contributions, sir, you see the journey started from 20 lakh crore, right? AUM. Now it has crossed almost 70 lakhs crores. What a huge investment in mutual fund sectors. The tagline Sahi Hai is really good. I did some courses from NISM, National Institute of Security Market. I observe, I closely monitor this mutual fund market, where the portfolio analysis, the international analysis is being done by the fund managers. That geopolitical analysis, the most important sector. So rupee devaluation is a matter of concern for transacting in the international market. Dollar dominance is still there. We have to accept it. 88.59 today is a big challenge. And that transaction, currency transaction, is also being done in the derivative market or foreign exchange market. Right, sir? It's an endless debate. Anything else? Or if you know anything additional, value addition point also, you are most welcome. Would like to discuss. Devashish sir, is it okay to?
Yes, sir. Thank you, sir. Thanks, sir.
Anything you want to add?
No, sir. We will discuss another day.
It's a see.
How the stock
my
exchange.
Hands are tight, my hands are tight up to this 1 hour session. It's not enough, not at all. So
Yes, sir. Yes, sir.
I have to be very balanced in mind to speak about the international exchange, foreign exchange within 1 hour. Oh, it's not possible. Anyway, so I tried my level best to give all statistics and information. Anybody else would like to ask any question, please? Any queries, any doubt? Otherwise, we'll wind up this session. So the next class, we'd like to discuss the Unit 3, which speaks about the multinational enterprises and national institutions. So we'll come across with the entrepreneurship, multinational entrepreneurship, right? So I was going through an article that there is a big challenge in Odisha startup. Some good number of, they failed. There is a big challenge for the seeds capital, right? Bank support, FI support, venture capital support. Biggest challenge, and marketing the product also. It's a big challenge. Anyway, I'll not take much time. last class I took your 20 minutes extra. So thank you very much, sir, all of you, for patience hearing to me. If you have any queries, I'm there over telephone also. We can discuss, or when we'll meet, we'll discuss in details. Right, sir? Thank you very
Thank
much.
you, sir. Thank you, sir. Good night, sir. Thanks.
Good night.
Thank you, sir. Thank you very much.
Thank
Good night,
you.
sir.
Good night.
Good night.
Good night. Good night.